Are you sitting on a small business, working your heart out as you approach retirement, or maybe you're already supposed to be retired but you're still taking on consulting or freelance work and wondering where on earth you are supposed to safely put your money? Listen to me. I hear from so many of you every single day who say, "Susie, I don't have a big corporate 401k with a massive company match anymore. I'm working for myself, or I own a small business with just a couple of employees, and I am terrified that I haven't saved enough. Is a small business 401k right for me, or am I about to make a huge financial mistake?" People, I want you to listen to me very, very carefully. If you are anywhere near retirement age, whether you are 55, 62, or 68, and you have self-employment income or own a small business, not knowing your retirement plan options is costing you thousands upon thousands of dollars in unnecessary taxes. But setting up the wrong plan can also trap you in fees and administrative headaches that you simply do not need at this stage of your life. So let's unpack this together right here, right now, so you can stand in your truth, protect your hard-earned money, and build the financial security you deserve. First, let's address the fear that so many of you carry. The fear is that because you aren't working a standard 9-to-5 corporate job anymore, you've missed the boat on high-powered retirement accounts. You think your only option is a traditional IRA or a Roth IRA where you can only put away a few $1,000s a year. And you think to yourself, how am I ever going to catch up? How am I going to shield my business profits from taxes while securing my golden years? Here is the truth: a small business 401k, often called a solo 401k if you have no full-time employees other than yourself and your spouse, is one of the most powerful financial instruments ever created for self-employed individuals and small business owners. Why? Because when you own the business, you wear two hats: you are the employee, and you are the employer. When you contribute to a traditional employer's 401k, you can only contribute as the employee. But with a solo 401k, you get to contribute twice. As the employee, you can put in up to $24,500. And if you are age 50 or older, listen to me, you get a catch-up contribution of another $8,000. If you are between ages 60 and 63, thanks to recent rule changes, you may even qualify for an enhanced super catch-up contribution of $11,250. And that's just as the employee. As the employer, your business can also contribute up to 20% to 25% of your net self-employment earnings. When you combine both employee and employer contributions, you could potentially put away up to $72,000, or well over $80,000 if you're over 50, in a single year. Think about what that does to your tax bill today, and think about what that does for your peace of mind tomorrow. And listen to this: if your spouse works with you in the business, they can participate too. That means as a household, you could potentially shelter double that amount. That is life-changing money being protected from the taxman and put straight into your future. Now, you might be asking, "Susie, what's the catch? Is a small business 401k always the right answer?" This is where you must pay very close attention, because I will never lie to you. A small business 401k is not for everyone, and if you get this wrong, it will cost you. Question number 1: do you have full-time employees who are not your spouse? If you have full-time W-2 employees who work more than 1,000 hours a year for you, you cannot just set up a solo 401k for yourself and exclude them. The law requires you to offer coverage to eligible employees, and setting up a full traditional 401k for a company with employees comes with plan administration fees, compliance testing, and fiduciary responsibilities. If that is your situation, a solo 401k won't work, but a simple 401k, a simple IRA, or a SEP IRA might be a much smarter, lower-cost option for your business. Question number 2: how much are you actually earning from your small business, and how much do you actually need to save? If your small business or side hustle brings in $15,000 or $20,000 a year in net income, setting up a complex 401k structure might be over-engineering your life. A simple traditional or Roth IRA, or a SEP IRA, which takes 10 minutes to open at a major discount brokerage, might give you all the tax benefits you need without any paperwork hassle. Question number 3: do you need access to this money, or are you looking to lower taxes right now? Many people entering retirement think, I'm 62, I want to lower my tax bracket while I consult, but I also want the flexibility to take a loan if my business needs cash flow. Did you know that a solo 401k allows for plan loans, allowing you to borrow up to 50% of your account balance up to $50,000, whereas IRAs do not allow loans at all? That flexibility alone can be a massive safety net for a small business owner approaching retirement. So what is your actionable takeaway today? What do you need to do right now? Number 1, look at your business structure and your payroll today. If you are a solo operator, freelancer, consultant, or spouse-owned business with no full-time employees, write this down: solo 401k. Number 2, call a major low-cost brokerage firm, places like Fidelity, Charles Schwab, or Vanguard. Do not go to a high-fee advisor who wants to charge you 1.5% wrapped in annuity fees just to open a small business retirement account. Open a self-directed solo 401k with zero setup fees and zero annual maintenance fees. Number 3, decide between traditional, pre-tax, and Roth contributions. If you believe your income in retirement will be lower than it is right now, take the upfront tax deduction with traditional. But if you want tax-free growth and tax-free withdrawals in retirement without worrying about where tax rates are heading in the future, maximize the Roth Solo 401k option if your plan allows it. People, retirement is not the end of your financial journey, it is the beginning of the ultimate freedom you have worked your entire life to achieve. Do not let fear, ignorance, or procrastination stop you from claiming every single tax break and savings vehicle the law allows you to have. You have the power to control your financial destiny.